Hey everybody, my name is Kyla. Welcome to my channel where we talk about the stock market and the economy amongst other things. Today I want to talk a little bit about how money works, how the banking system works, and then talk about what happened with Silicon Valley Bank. How does money work? Money is privately created through lending, so loans create deposits. That's a little bit confusing to wrap your head around, but essentially, you deposit $100 into the bank then goes and loans out that $100. It's the money creation process, right? And that gets into the balance sheet. So that $100 that you deposit with the bank, that goes into your checking account, and that checking account is a liability for the bank, an asset for you, but a liability for the bank. They have to make sure that they can get that back to you. Fractional reserve banking is a core part of how the economy works. When we deposit money at the bank, it just doesn't sit there. It goes out and gets loaned out, etc. That's the way the businesses operate. The bank business operates. They borrow short to lend long. Matt Levine had a great breakdown of this in his newsletter today. Essentially, you go and deposit your $100 at the bank. Previously, the bank could pay you 0% interest and no worries at all because the Fed had kept rates so low. So they'll take your deposits and they'll say, okay, we're going to pay this guy 0%, but we're going to go invest in something that's going to pay us 2%. And they're going to make 2% on your money from that. But now the Fed raising rates, it's like, oh, geez, we got to start paying these people for keeping our money with us, right? All of a sudden they have a bunch of stuff that's only paying them 2%, but let's say maybe, the Fed hikes rates, all of a sudden they're going to have to start paying you 3%. So they can start losing money on what they have to pay their customer base relative to what they're earning on securities. And if they start losing money like that, that's not good. And of course, there's like deposit betas and things like that. It's not a one-to-one. That can really mess up the banking business model when rates fly up. Banks essentially exist to issue money on behalf of the government. That's an important thing to keep in mind. It's all interconnected. Banks are a huge part of the money creation process. Arguably, they are the money creation process. So why did Silicon Valley Bank fail? Well, the Fed was raising rates and they had no hedges on. So the Fed was over here ripping, key in the ignition, gas pedal all the way to the floor. And Silicon Valley Bank was like, no worries, dudes. We just won't hedge. Yikes, right? They also had advocated for regulatory exclusion. So they were like, listen, we're different and special. We should not be in part of Basel III regulations. We don't need to have the regulatory status as these big old banks. We're just a tiny little guy. They had sort of shot themselves in the foot with that. And then also at the same time that they were not hedging, VC funding was drying up. That impacted existing customers as well as new customers. So new customers weren't going to deposit with the bank because nobody was getting a bunch of money. And then existing customers were like still ripping through cash, still trying to run a startup in this economy and trying to figure out what to do. They had a pretty risky deposit base that was burning through cash. All of a sudden, Fed started raising rates, VCs dried up, and things got really bad. Deposits fell, value of the bonds that Silicon Valley Bank had bought fell. A statement that says SVB lost more than $1 billion every time interest rates went up 25 basis points and interest rates went up 450 basis points, right? So all of a sudden people are paying attention to this. They're like, what the heck is going to happen? That gets into the digital age. So a bank run happened, right? So 42 billion of 170 billion of deposits was yanked in one day. There was also a tweet from this absolute baller on Twitter who was like, me and my buds ignited this bank run, and we said, what if we bought shares of Silicon Valley Bank as we're encouraging this bank run to happen? Wouldn't that be crazy? That gets into social media risk. Twitter was a really big part of this. And now Silicon Valley Bank is getting bailed out, kind of. The Treasury, the Fed, and the FDIC all released a statement saying that all depositors, including uninsured depositors, will be made whole. Signature Bank, which is a crypto bank, has been closed due to systemic risk. There's a new bank term funding program under a Fed 13.3 facility. Pretty direct, and it's pretty intense that they're opening it up under 13.3. The Department of the Treasury will make available $25 billion from the Exchange Stabilization Fund as a backstop for this program. They're also going to offer depository institutions up to 1-year loans. It's at par value to help absorb any interest rate losses. And so what that means is that if you have losses, no, you don't. Like, don't worry. Everything's gonna be fine. And that is wild because it sort of gives Fed free rein to keep on hiking, but it also gives these banks free rein to make just maybe really stupid decisions, but we'll see. Shareholders and unsecured debt holders will not be protected. Fiscal authority is clearly involved, so it's a question about like, is it a bailout or not? No, I don't know. There's so many technicalities to this stuff, but essentially, it's a big package that the Fed is putting together. They were very clear that they were very concerned about this concept of systemic risk, that they saw a big issue here. What's next? What are the VCs gonna do? You had these VCs just screaming on Twitter, all caps, saying the dumbest stuff imaginable. There has to be accountability for that too. How can I help? And now the question is what the Fed is going to do. The theory is that the reason that the Fed did this so aggressively is because they want to be able to continue to hike. But now everybody's like, well, I don't know, Fed, if you can continue to hike. Like, a bank failed. That's pretty crazy, guys. They're trying to tighten financial conditions, but also they want to keep the banking system stable. They have this liquidity facility that ignores losses from rate hikes, this quote from Steven, and that's uniquely positioning them to walk that line. What this essentially ended up doing is it was sort of the first big shudder from what happened with the Fed raising rates so fast and so furious over the past few months. Now, though, it's like, well, everything ever is just moot. FDIC insurance of $250K, they're going to come in and swoop in and save the uninsured depositors, so those that have money over $250K in the banks. Also, the Fed is going to protect you from really any interest rate losses that you would have on your securities. So now these bonds on bank balance sheets can be valued at par, meaning that essentially no losses will have to be recognized. The Fed will go full speed ahead on rate hikes. Maybe. It seems like the Fed is going to want to separate their tools for financial stability versus their tools for fighting inflation. They'll probably go 25 basis points, but they probably can't go 50 or else markets are going to freak. There was another thing that said, Bank Panic 101, the lender of last resort must leave, no doubt. And I think that's kind of the big takeaway here. What happened with SVB was very important, but even more important is how the Fed responded and how swiftly and bigly the Fed responded here. This is a big move. Banks freaked out this morning when the stock market opened, but this shows that the Fed either is very, very aware of what is going on in the markets and they are going to step in and be that lender of last resort and not leave any doubts, or the Fed really wants to keep on hiking and they will do anything to get inflation down to 2%. And those goals are probably intertwined more or less, but we saw big action and then we saw big crybabies. So take from that what you will. If that's what happened with Silicon Valley Bank, hope you all are doing okay out there. Sure, there'll be updates down the road. I have a Notion document with all these notes. I published a video 2 days ago on Friday. I don't even know what day it is, talking about it more. So go ahead and check that out. Hope you all are doing okay, and I'll talk to you very soon. Bye.